Hello and welcome to this special programme on the latest ECB rate decision. Here are your headlines. European stocks rise ahead of the ECB rate decision in a few minutes' time, while no change is expected on policy. And Mario Draghi prepares to deliver his final press conference as ECB president, as Christine Lagarde is poised to take over in November. And German factory activity shrinks for the 10th consecutive month, while the eurozone manufacturing PMI is unchanged at a 7-year low. Now, rates are widely expected to remain on hold at today's ECB rate decision. However, the real focus will be on the changing of the guard as Mario Draghi hosts his final policy meeting as president. Christine Lagarde will take over the position of president in November. The first rate decision under her control will take place on the 12th of December this year. Let's have a quick check now on how indices are trading ahead of the ECB announcement in just under 5 minutes time to go. As you can see there, it's positivity across the board. The FTSE 100 in the UK outperforming, up by almost 0.1%, while the German 30 cash just above 0.5% higher. Let's have a quick check now on the currency markets, because the euro is staging a very positive month. It's on track for its best month, in fact, since January 2018. Meanwhile, here's a check on US markets. We can see it's positivity across the board. A couple of hours to go until the start of the cash session stateside. It's the US Tech 100 cash that's the real outperformer. Of course, Tesla staging that massive gain on the back of strong earnings. This is IGTV, here to help you trade the ECB announcement and the markets following the release. I'm joined today by Chris Beauchamp, IG's chief market analyst. Chris, good to see you. Now, I guess the real question is, we're not really expecting much in terms of changes on rates, so how should we be trading the decision?
I think you'll be expecting more downside, really. If you look at the euro, you mentioned it's the best month for the euro against the dollar since January 2018, and the chart has seen it rally. We saw it rally to 126 then, and since then it's been all downhill from there. All the time the euro has rallied, there's been another selling opportunity. I suppose this time you have to ask, is this any different this time around? You've seen the euro surge impressively, but what can the ECB do to really drive this one higher? I think you've had PMIs this morning. They're not bad, but they weren't spectacular either. I think there's a question of, is the worst behind us? But the corollary of that is, are things going to get any better? I don't think they are at the moment. You've got trade wars weighing on growth. You've got slowing growth around the world, which will hit Europe. I think as a result, you can expect further weakness in the euro. And I think at this point in time, you probably are better off erring on the short side of euro dollar than you are on the long side. I certainly wouldn't be buying it up here. I think you'd be more convinced that you have further downside ahead because of this long ongoing downtrend. You've seen it lose ground since January 2018, and it makes sense to stick with that direction until it's proven otherwise.
So where are we likely to see the volatility then? Is it in the euro, or is it more likely to be within the equity space?
Oh, I think the euro is the place to look at the moment, really. If we flip to the hourly chart here, you've seen it start to lose ground impressively over the past couple of sessions as well. So I think you could see quite a bit of volatility. Even if it does rally a bit, I think it still leaves the broader view unchanged. If we go back to, say, 111.80, 112, it still leaves, I think, poised for perhaps another turn lower in due course. I would not be surprised to see us talking about a lower euro when we come around again for Lagarde's first meeting in a few weeks' time.
So obviously it's the final meeting from Mr. Draghi. So does that mean it's going to be a quiet one? I mean, obviously in terms of the rate change, we're expecting nothing. But out of the press conference, could there be any clarity into the outlook in terms of monetary policy and that QE bond buying programme?
I think he's come under maybe some unjustified pressure because things in the eurozone haven't got much worse in September, and people will say, well, if they haven't got much worse, why was the need to go back towards QE, even if in only a small form? And you can expect a robust defence of that, perhaps a look back to the good old days of when he was the master of all he surveyed as ECB QE really powered a modest recovery in the eurozone. And his hands are a bit tied. He can't say too much over what the next president will do, if anything, but we know that the pressure is ramping up in Germany, that they are really opposed to what the ECB is doing, and it'll be interesting to see how that changes under the new management of the ECB. But I think he can look back with, I think, justified confidence and pleased with himself, I think, over the last few years and what he's managed to achieve over the course of his tenure. And certainly, if nothing else, the whatever it takes line will remain with us for a very long time.
And just very quickly, what do you think is the key question in the presser then?
This will be how the ECB can really, what it's going to do if QE doesn't generate the results it needs. What will it do beyond this, and how?
All right, I'm just going to interrupt you there because we've got the announcement that's come through as expected, and no change to the deposit facility rate or indeed the margin lending facilities. So that's widely as expected. The ECB says it expects them to run for as long as necessary to reinforce accommodative impact of its policy rates and to end shortly before it starts raising interest rates. ECB says it intends to continue reinvesting in full principal payments from maturing securities purchased under an app for extension period of the time past date when it starts raising interest rates, and in any case for as long as necessary. Now, of course, not too much detail here. I think we're likely to see a little bit more clarity when we get the press conference from Mr. Draghi a little bit later. But let's have a quick check on the markets there, because are we seeing any volatility in terms of the euro, Chris?
I wish we could say yes, but unfortunately it's not going to be on those decisions where it really spikes around. Maybe at the press conference we might get a bit more, but certainly there's the euro on even the 1 minute chart. Then you can be forgiven for assuming it's fallen asleep over the last few minutes, really. The ECB very much as steady as she goes. It was almost a dead meeting, this one, not going anywhere at all. So euro dollar holding on at the moment, but a lack of any real surge to the upside beyond the last few seconds, really. So I think we're expecting perhaps the further downside in euro dollar, if only because the outlook, the issue will be fairly, I think, cautious.
All right. Now, I mean, in terms of looking ahead, we are in this era of low interest rates, which has lasted a lot longer than we would have expected 10 years ago in the financial crisis. How much longer do you think this sort of era of low monetary policy can last?
Depends whose example you take, I suppose. If you look at Japan, which is arguably many people's model for where Europe is going, we could be here in 20 years' time and still talking about record low interest rates that haven't budged. Lost decade for Europe, whatever you want to call it. It is the problem of central banks. Maybe if we get hefty fiscal stimulus from around the globe, maybe inflation comes back. But I think at the moment there seems little reason to raise rates in the eurozone for an extended period, really. And you can expect this to be echoed by Christine Lagarde when she arrives, that the ECB has to wait and see what happens. I think while she might talk a good game about being more accommodative to the wishes of German politicians about raising rates, once you get your feet behind that desk, things will start to look quite different, I think, and she'll be more receptive to the pleas to keep that accommodative monetary policy in place.
Well, Lagarde has made that point time and time again that monetary policy is effective, but it's really the fiscal policy that's likely to make the real changes in terms of the outlook for the economies within the eurozone. I mean, does that mark a change from where we were at with Draghi as president?
Not really, no. The traditional plea in every ECB meeting now is that the bank has done what it can, but governments have to step in. I think that's the problem for the ECB, is they can only advise and warn, if you like. They're a bit like the Queen. They can only suggest what governments can do. They can't make them do it.
Now, you were alluding to this point before, but of course Mr. Draghi is coming to the end of his term and there's a lot of focus around his legacy. What's he going to be remembered for? Is it saving the euro? Is it that do whatever it takes?
It is. It's the moment he stepped in when there were fears that the crisis would spiral out of control, if you like, that it would hurt the eurozone, and we'd see perhaps an exit of at least one country from the eurozone. All that has been put to bed now. He's sent the firm message that the ECB would defend the euro, whatever it takes, and that's his parting legacy. And if nothing else, he could be credited with that of maybe the man who saved the euro. I think it's a fair enough title, at least in the short term. The next 30 years might be different, but in the short term, it certainly is the man that delivered that stability for the eurozone that people were looking for.
So what's your sense of the strength of the eurozone economy right now? We had that PMI data out earlier, the German reading in terms of factory orders saying that it shrunk for its 10th consecutive month in a row. I mean, does that raise alarm bells for you?
I think it remains an area of concern. We've been accustomed to poor German data over the last few months, so it's not a case of running for the lifeboats now. It is more a case of saying what will turn this one around. And I think the signs of détente in trade wars between the US and China, and the hints yesterday from Wilbur Ross that maybe we'd get some kind of deal over Eurozone cars into the US, maybe that will help. But that's the big worry, that the economic data is bad enough already, but what will make it much worse is if the US really does start to pick on the Europeans.
So do you think there are opportunities within Europe right now? I mean, we're in the midst of earnings season. We've had a few good German numbers out this morning, Daimler and BASF as well this morning. Pretty good numbers. I mean, what does that tell us about the strength of corporate Europe right now? And does that create any opportunities?
Well, yeah, I think it shows that maybe they're weathering the challenge. I think BASF was the one a few months ago with its profit warnings that suggested there was something awry in the German economy. Now, if you look at the DAX, you've seen an impressive set of rallies over the past couple of months, really good, strong rally from August, September, decent pullback, buying opportunity off the 200-day into the beginning of October, and a further rally since then. It does look as if, maybe we've said this before, but maybe the time has come for Eurozone equities to finally do some real catching up with the US. It's been a good round trip for the DAX over the past 2 years, from above 13,000 down to 10,000 and below, and the recovery seems set to continue here. I think you can see reasons for why this uptrend is set to continue, and it's the kind of weakness we had at the beginning of October. I think that points us towards further upside for equities over the longer term.
All right, now that's all we have time for today. Just to recap, it was no change for the deposit facility rate from the ECB as widely expected. At 2:30 p.m. we'll get a press conference from President Mario Draghi, his final one before he hands over the reins to Christine Lagarde. Thanks so much to my guest, IG's Chief Market Analyst, Chris Beauchamp, and thank you for watching this special programme on the latest ECB rate decision.